Hey, this is Greg. Welcome to the channel. And if you're new to the channel, we talk about business and investment on this channel. And on this episode, we're going to be talking about, should you buy Boeing stock now? All right, so that's what I'm going to be talking about, and it's coming to you right now. Alright, so we've talked a lot on this channel about different stocks, different opportunities that we see. It's kind of like a series that I've been putting out there called Should I Buy This Stock Now? And on this episode, we're going to be talking about none other than Boeing Corporation. Now, as you probably know, and as most people know, Boeing is a great American corporation that is one of the leaders and one of the innovators in the aerospace industry. And it's also well known that recently, in the last couple of years, Boeing has fallen on hard times. The woes of the company started going back as far as March of 2019, when one of their flagship planes, the 737 MAX, got taken out of service due to two horrendous crashes that killed over 300 people. The crashes were due to malfunctions of the aeronautics within the airplane, and regulators basically grounded the plane until actually last week, which is why it came on my radar screen. Now, the other issue, aside from the 737 being grounded, is, of course, the pandemic. This has affected all of the aeronautics industry, including the airlines, and of course hospitality and everything associated with travel has been tremendously hit by this. And as you'll see in a few minutes when I go through the stock chart, two things happened last week. One was that the regulators said that the 737 could now fly again, and the second thing that happened was more positive news on the vaccine coming out. These two factors caused the stock to rally. It was down in the mid 150s, and it caused it to rally above 200, and then near the end of the week it faltered a little bit and closed around 199. So really the question is, given those two factors that have now been not resolved, but they're in the process of getting resolved, is Boeing at this point in time around 200 something that you should be looking serious at, and something that you should be thinking about adding to your portfolio? I think a good way to start to look at this is, let's take a look at a recent CNBC interview with David Calhoun, the CEO of Boeing, and then I'll come back and give my thoughts on the interview. Take it away.
You have $27 billion in liquidity at the end of the third quarter. You guys have made it clear that you will pull other levers if need be. Do you expect to need to pull any more levers this year, or let's say in the next 6 months?
Well, I don't want to predict that. I will say the $25 billion we raised, based on the world we see ahead, was an appropriate number and a good number. And it remains adequate for us to deliver on the plans that we have ahead of us. But having said that, we will stay conservative on this front. Liquidity is the metric of the day for the travel industry and for Boeing. And we have to keep our eyes squarely focused on it, stay conservative with the balance sheet, make sure we've got enough so when the turn happens, we're ready for it and we can respond to what I think will be ultimately a robust recovery.
Street, first question. Do you think that the MAX is the most important thing facing Boeing, or do you think it's liquidity?
No, it's always been the most important. The two are perfectly related. The MAX has cost us a lot of money, and we have had to sort of up the ante with respect to liquidity to make up for the fact that we couldn't ship the world's most popular airplane. We are getting very close, I believe, to the finish line with respect to certifying the MAX and to begin deliveries. We have been patient. Our regulators around the world have worked constructively with us, and I think we're at that moment. So I'm not going to predict by day or week, by the fourth quarter, I believe we will be in recovery mode with respect to the MAX. And I'm very proud of our team, and I'm very proud of that airplane. It is a remarkable machine and as safe as anything in the air.
Okay, so from that interview and also from some of the work that I've done, let's face it, there were two basic problems that affected the stock and affected the company going back to when the 737 MAX was first taken out of service. Okay, that was obviously one major issue. That resulted in a big hit to the company even before the pandemic came in. The pandemic coming in put extreme pressure on all areas of the aeronautics industry, particularly commercial air flight, which is still in an enormous depression, probably down 70% from where it normally is. And this is going to be a continuing problem, and it's still an issue. Now, having said that, when I look at this company, I think this is in line with what David Calhoun was saying, is that the most important thing for this company at this point in time is to have enough liquidity to make it through the second phase of their travails, so to speak, meaning getting beyond the economic downturn and the fall off in air travel, so that the airlines can repair themselves and they can begin to take down essentially the backlog of these extra planes that Boeing currently has. If they are able to do that, they will make it, and I believe that, who knows, a year, 2 years out, the stock will be back over 300. One very smart thing that they did was, I think it was around April 2019, they did a $25 billion bond issue, which gave them a tremendous amount of liquidity and helped with their cash burn, which we'll talk about in a minute. And I think that was a very smart move. They also implemented some layoffs, unfortunately, and some other structural things to take some of the pressure off of the cash flow. And I think all of those moves were extremely smart. I want to play you now another Wall Street analyst. Her name is Sheila, and I'm not even going to try to pronounce her last name. She's with Jefferies. She has an unusual last name. And I don't know her, but she seems to have a pretty good handle on the company, and I thought it would be good to just listen to her views, and then I'll comment in a second. Okay? Take it away.
All right. So what does Boeing's ungrounding mean for airlines? Let's bring in 𝐥𝐤𝐤𝐞, Jefferies analyst. She joins us on the fast line. Sheila, great to have you with us. I'm going to start off with a question that I posed to the panel here in terms of the biggest unknown. And for you, what do you think the biggest unknown is at this point? Is it whether or not people will return to flying?
I think the biggest unknown is remove, Melissa. And, you know, we were waiting for two catalysts. One was the vaccine, and two was the MAX airworthiness directive. And I think why today is such a big deal, even though it was known, is it's going to remove $14 billion of inventory on Boeing's balance sheet over the next 3 years. So for us, that's positive. We just actually initiated on the airline sector yesterday. Our call here is you want to buy domestic airlines, so Southwest first, over internationally exposed airlines. And that's where the narrow bodies like the 737 MAX flies to, because that's where we think traffic will return to normalized levels by 2023. So I think some of the biggest unknowns are actually removed now.
Do you feel confident that airlines won't look for concessions with regard to price on these planes that have been mothballed in the desert for months and months?
For sure. That's a big reason why we took our Boeing free cash flow number down massively in October, is we had about $5 billion or so free cash flow generation for 2021. Now we're down $3 billion. And a lot of that, Melissa, is because these airlines already prepaid some of what they were expected to receive. So those prepayments are going to be a lot smaller next year, and it's a big $4 billion headwind to Boeing next year. So those concessions are being factored in.
All right, so again, focus on the cash reserves, focus on the 737 coming back online. And she mentioned something interesting to keep your eye on, that basically what's happening now is going to take down $14 billion worth of inventory over the next few years, which is really going to help the story, okay? I think all of these things are important. Now what I want to do is let's take a look at the analyst presentation. This is the presentation that the CEO gives to the Wall Street analysts for the third quarter. Let's take a look at it because I think it's very instructive. Okay, so here is the third quarter performance review. This is the review that the CEO and senior management gives to the Wall Street community. And you can see here is a business update. They talk about the business environment. Of course, they talk about stable growing demand. Now, it's important to understand that this business is composed of three main business segments. One is, of course, commercial airlines, which everyone's familiar with. The other is defense. And then the third is servicing. Everyone knows that the airlines have been under pressure, and as a result, that puts pressure on Boeing. Down here, we talk about managing the liquidity is the important bridge to recovery, and I think that those two things, basically the recovery from the pandemic and an eye on liquidity, are the two most important things for the company to focus on to get through this difficult period. This shows the different planes that they are involved with, and the backlog, a total backlog of more than 4,300 commercial airplanes. Wow, that's amazing. This I thought was interesting. This is a timeline here of what's basically happened. In March, when the pandemic basically hit, they drew down on their term line of credit. They suspended dividends and terminated share repurchase activities, which makes sense to conserve cash. They had a series of layoffs, reduced production, and here, as you can see, they executed a $25 billion bond offering, which was very smart. The markets had recovered by that point and allowed them to borrow at very low rates. And there were some more layoffs, and they started production on the 787. But as I said last week, the 737 MAX was allowed by regulators to come back into operation, which was a major issue and allowed them to clear a major hurdle. Let's go down and look at third quarter revenue and earnings. You can see, as compared to 2019 third quarter, revenues are down from $20 billion to $14.1 billion. You can see that they incurred a loss of $1.39 a share in the third quarter. Not a pretty picture. But when they talk about the deliveries and the backlogs, they still have a healthy backlog of orders, although a lot of the inventory that they currently have is sitting there idle because the airlines cannot take delivery of many of those airplanes. So that's obviously a big hit to cash flow. This talks about their defense business, space and security. This is a huge business. Orders valued at $5 billion with a backlog of $62 billion. So, I think it's pretty clear when, and it's going to happen, it's just a question of when flying gets back to normal, even though people believe that business will not get back to normal, it'll eventually will. Things will eventually get back to normal, and this company is going to be, in my view, very successful. Let's take a look at cash flow. This tells the full story. You can see third quarter they were already operating at a negative cash flow due to the 737 being taken out of commission. However, look at this. They used up $4.8 billion of cash in the third quarter of 2020, which again points to the importance of liquidity going forward. Here, they're trying to keep their debt under control. They have $59.5 billion of debt. They were able to maintain investment grade ratings by S&P, Moody's, and Fitch, which is all good. And, you know, the summary is what we've been talking about, but I think the most important thing is that long term, the industry fundamentals remain strong, and their portfolio and the businesses that they're in are very well positioned within a recovering industry, and that's what we try and look for when we're looking at stocks of this type that have sold off and that are undergoing a difficult period. Okay, now what I want to do is I want to take a look at the stock chart over the last 4 years, and I just want to make a couple of comments on that because I think it's important when you're looking at where we should be looking at our entry point on this particular stock. All right, so here you see the stock chart, and you can see over on the left here that things were going fairly decently, and then I believe this part of the chart right here was this is when these accidents occurred and the stock sold off. And then I believe this was the second accident. There were two accidents that were several months apart. And then, of course, the stock bumped around. And then, of course, this was the beginning of the pandemic, all the way down into the basement. It recovered a little bit, a seesaw pattern. And then from, it looks like the beginning, end of June, beginning of July, it had a downward trend. And around the time when David Calhoun was giving that interview, the stock was right around here, right around 50, a little above 50. And this little rally right here is the result of two things, both the positive news on the vaccine and also the 737 MAX coming back into service. Okay, so it went up to around 200 and then it stalled. It went up a little above 200 and then it stalled, and it's right about here at this point in time. So the question is, do we buy it here, or do we anticipate that there's going to be a sell-off and wait for it to sell off and then buy it? You know, I guess I would be inclined to wait a little while and just see what happens. I think there's going to be softness in the stock because there's going to be political uncertainty, and there's also going to be uncertainty with respect to the continuing expansion of the virus. You know, there's a lot of pickup in many of the states right now in the contagion, and so I think that's going to cause uncertainty. I could imagine this stock selling down a bit. I'd look to be a buyer. This is just my opinion. I think if you bought it here, you'd be fine a year or two from now, but I would be looking to buy it in the 170s or high 160s, and then I would be riding it out until after the vaccine comes in and after the airline industry repairs itself and things get back to moderately to normal. Now really what this is this follows the pattern of some of my other recommendations where we're looking for just really great companies. I did one on Intel, which you should definitely check out. I did one on Exxon, and I did one on Chevron. These are great companies that just for whatever reason have sustained enormous sell-offs, and they present us with a buying opportunity to buy these great companies at a discount. So along those lines, I'm going to be putting up 2 videos here that you should take a look at. They are other stock choices that we've been talking about, other compelling investment buys. And I think if you take a look at them, you'll be more familiar with the channel. And I hope that you subscribe and like this video so you can be on board for future videos, which will be coming your way real soon.